Good evening, everybody. This is uh, The Tax Life. I am your host, Jeffrey White, 30-year tax professional, bringing to you some information, some education. Hopefully, it'll be a little bit entertaining. And it's all about making that transition from tax preparation to tax planning, a more holistic approach and to have a better tax life. So, tonight I want to start off doing something a little bit different. Um, in most of these sessions previously, we've been talking about the tax life from the taxpayer's perspective. And I've been giving tips and explaining different tax topics and giving examples of how tax planning is a better strategy, a better way to go than what we're commonly all doing currently is tax preparation. So I am, though, involved deeply in tax preparation, and I want to say that part of my motivation for um, being a crusader for tax planning and tax strategy, it's not all altruistic. It's not all about you. Some of it's about the tax professionals and the individuals who are preparing your taxes. And so I want to kind of give you an idea tonight when I first start off about the tax life from the tax professional standpoint. Okay, so like I said, I've been on the tax professional side for over 30 years now, and when I first began in taxes, incidentally, I did my first tax return when I was just 15 years old. If some of you guys may remember, it was called a 1040EZ. But yeah, I did my first tax return when I was 15, and I did it by hand. And I had a job, my first summer job when I was 14, in downtown Los Angeles, a city program for underprivileged kids. Made some nice money working at the LAPD, washing and waxing and gassing up police cars. But I did my first tax return when I was 15, and little did I know, all these years later, that I would be so deeply involved in living a tax life myself. So again, um, in the previous sessions, they've primarily been all about, and they'll continue to be about, making your tax life better from a taxpayer's perspective. But I kind of want to give you guys a little bit of insight on what it's like for a tax professional at this point in time of the year when things are going full tilt right now in tax preparation and in my offices. So currently, I have four offices, two in Georgia and two in California, and we are going full speed ahead, full tilt, all gas, no brakes, as they say. And um, typical day for me is 6 or 7 appointments. I got phone calls all day long. I have tax clients that they only want to see me, and we got plenty of tax professionals in our office, but kind of work with people and maybe even spoil some of my tax clients. And but my day is really really busy, and our offices are really really busy. We're receiving documents um, by drop off into our offices physically. We're receiving uploads of documents, tax documents, to our portal accounts. The phones are ringing off the hook. We're making appointments left and right, and our days are super busy. Some one of the questions I got last week was, where do you do your sessions from? And our sessions are done in one of our offices right here in beautiful Snellville, Georgia, which is a suburb of Atlanta. And I'm just now, I would say, ending my day. Typical day starts around 9 in the morning and doesn't end until around 9 in the evening, and probably later on that after I take some work home with me. But this is my tax life, and I just wanted to give you guys an idea of an extreme example of what I was talking about between the difference of tax preparation and tax planning. Today, I'm sitting in my office working with a client. I get a client come into the office, they sign in, and they drop off some documents. And I want to show you, when I say drop off documents, I want to show you what I'm talking about. So I don't know if you can see this, but this is a drop off of documents. This is from a client, tax preparation client that has a business, a transportation company, and this is what I got. This is actually not trash, but a bag of receipts. Okay, and it dawned on me today. I said I'd like to show the viewers of this video when I talk about tax preparation and being in a reactive mode. This is kind of an extreme example, but this is an example of tax preparation. And I know I'm not the only tax professional that might see this or be going through this. So if you are a tax professional and you are seeing this, and you can recognize and understand it, um, yeah, just give me a thumbs up, okay? All right, yeah, okay. Hey, what's going on? All right, good to see you out there. So that's one example of tax preparation. Later on in the day, I had an in-office appointment, and hey, Shushu, what's going on? How you doing? Thanks for viewing. Later on in the day, I had an in-office appointment with another client, and that client is actually in the process of working with our offices for tax planning services. And I'll give you an example of what she brought us here. Okay, nice, neat folder, documents in it. And this is a meeting that we have on an ongoing monthly basis because she and understands the uh, in her particular case, in most cases, understands the advantages that are gained from tax planning. And so I know these are extreme examples, but I wanted you to kind of see what kind of tax life that your tax professional, um, probably the person that's doing your taxes might be living their tax life. And this is my tax life for the past 30 plus years. Again, not always in those extreme examples, but um, I'm kind of giving you guys an idea of why I'm champion and going to be crusading for tax planning for the rest of my life. So, just a quick example of some of the things that go on in my tax life. I found my niche. I found my purpose. My tax life is ingrained in my daily life, and I appreciate the fact. And it's taking me some time, but I appreciate the fact that I found my purpose. And again, it's to educate, is to inspire, is to bring attention to, is to maybe sometimes bring a little bit of entertainment to your tax life, and hopefully we can get you moving in a direction that's proactive versus reactive. All righty. So let's get tonight's session started. Tonight's session, it's all about knowing tax brackets, okay? How to optimize your tax brackets and save more. And we're going to be doing a lot of examples in tonight's um, session. But tax brackets are probably um, one of the most either least known tax systems within the tax frame of the U.S. government, or most misunderstood. So tonight I want to dispel some misunderstandings, some rumors, and give you guys some real good information about how tax brackets work and how they save you money. Let's start off with an example. We have two taxpayers. Let's call them Mike and Sarah. And I might refer to my notes quite a bit tonight. Again, in my tax life, I'm not getting as much sleep right now, and don't have as much time to study my presentations, but want to still give you some really good, valuable information. So I may refer to my notes a little bit more than normal. But two taxpayers, Mike and Sarah, they both make about $100,000. They're both single, filed the same way, single taxpayers. They make about $100,000 in taxable income. Mike paid about $18,000 in taxes last year, while Sarah only paid $11,000 in taxes. Okay, same income, same filing status, but why did Sarah keep an additional $7,000 in her pocket? I can tell you why. she understands tax brackets. Okay. Um, so in tonight's lesson, we're going to talk about how tax brackets actually work. What's the number one misconception about tax brackets? How they really work? What taxpayers know about tax brackets? What tax professionals know about tax brackets? That's going to be something that will surprise you. How what they really are. We're also going to bring out some real strategies for business owners and high earning income individuals, people that make W-2, but make really good income, six figures, double six figures, clients that might even be in close to the half a million dollar. There are still some strategies that you can take without doing a whole lot of repositioning. So we're going to talk about those and give you some real life examples. We're going to talk about how you can structure your tax life and your income legally to pay less taxes, and how to keep more of your hard and money. And then we also want you to understand that if you don't have a proper understanding of the tax brackets, then you're probably paying too much in taxes, even without even realizing it. Okay. So, have you ever looked at your tax bill at any point in time in your tax life and thought, "Man, this is crazy. It must be a better way." Well, I want you to stay tuned in to this session all the way to the end. And by the end of the session, I hopefully believe you're going to be very, very fulfilled, and you're going to see how tax brackets, uh, you'll see them in a different light. And you'll see how they may not be as scary or as imposing as you might think. So understanding tax brackets, it's one of the foundations of taxation, okay? And it sets a tone in uh, how much you pay in your taxes every year, okay? Let's talk about what people think tax brackets are, and surprisingly, what a lot of tax professionals think tax brackets are. And I can speak from life experiences because when I learned how to do when I professionally learned how to do taxes uh, around 30 plus years ago, I was as green and didn't understand taxes as anybody out there. And I took a basic income tax class with the big firm H&R Block, and I worked for them part time. Went to work during the day, and then took a little break, and then went to work at the H&R Block in the evening time. And it wasn't until year three that I actually found out, well, not will say found out, but I actually understood and knew how tax brackets really work versus what I thought. And the main driver of how I found out was I began to, they asked me at H&R Block to teach the class. So the 3 years that I was there, they thought I did pretty well. They appreciated my approach with taxpayers and my approach to taxation in general. They approached me and said, "Hey, would you like to do the tax preparation class, the one that you took a few years back?" I said, "Me?" I said, "Really?" And I was really taken aback, but that was not my first experience in instruction. Did a little bit of instruction in the military as well. So I'm a lifetime learner. I thought it would be a good thing to do. I took the challenge, and in preparation for teaching the class, that's when I actually found out how tax brackets really worked versus what I thought prior to that. So let's start with most taxpayers have an idea of what they think tax brackets are, and they're somewhat correct. Obviously, tax brackets are set up in percentages. Okay, let's say 10%, 12%, and 22%. Everybody kind of has an idea of what a tax bracket is in that regard. Um, what what most people believe though, and a lot of new tax professionals or tax professionals that really don't have a passion for this, what they don't understand about tax brackets are, what most people believe is that the total income that you make, or the total income that you're taxed on, when you fall within that bracket, then all your income is going to be taxed at that rate. So let's just have an example that you make 100,000 and you fall into to 22% tax bracket. Well, most people, and even some tax professionals, because all tax professionals are not created equal, but most people, most taxpayers believe that all of that 100,000 is going to be taxed at 22%. Okay, if you thought that, go ahead and put that in the comment. Yeah, I think that, or I thought that. Well, that's not true. That's not the reality. That's not how they work. Okay. Um, the internal revenue. Let me give you the definition of the internal revenue. Defines tax brackets as divisions at which income taxes and percentages change in a progressive tax system. So, what that's saying is that the United States is a progressive tax system. Okay, and the more you make, the more you're subject to paying taxes. And the tax that you pay is going to be somewhat determined by the percentage or the tax rate, which is that 12 or that 10 or that 22%. Now, what most people perceive about the fact that they may have to pay all of their income that they make in that top bracket that they hit, that's where the misinformation or the misunderstanding, let's call it, that's where the misunderstanding comes into play. So the determination of it being progressive means that it works in layers, or you might say in steps, or in this case, the United States system says brackets. So there is a separation of the income into different brackets, let's say, or steps. So that first percentage that we said 10% might be here, and then obviously, that 12% might be here, and then that 22% might be here. And what people traditionally think is that if they hit the $100,000 mark and at $100,000, your tax rate is 22%, then all of their taxes or all their income is taxed at that higher bracket. But in the reality of it is, within each bracket, there is income levels. So that first level at 10% might be from 0 to 25,000, and then that next level from 10% to 12% might be 25,000 to 75,000, and then that 22% bracket might only carry what's from 75,000 to 100,000. So you can see how it moves progressively up, and you're not necessarily hitting that top bracket for all your income, but in stages or in steps or progressively higher. So this is where the biggest misnomer about how tax brackets work. In my office every year, we sit down with taxpayers and clients, and invariably they talk about overtime and how they think, oh wow, I don't want to work a lot of overtime because I might get pushed into that bracket, and then my income will get 100,000, and now I'll be taxed at that highest rate. But in reality, that they'll be taxed initially from 0 to 0 to 25,000, and then that'll be at the 10%, and then at 25 to 75 would be taxed at that 12%, and then only the portion between the 75 and the 100,000 is going to be taxed at that higher rate of 22%, not the full 100,000. So that's the biggest misnomer about tax brackets and how tax brackets work. And then knowing how tax brackets work, you have a lot more control on how your final tax numbers are going to turn out. Okay. Okay. Hey, Fred, what's going on, Fred? Yeah, man. I'm telling you, it took me 3 years to find that out, and I have calmed a lot of nerves when I sit down in front of a client and they give me their concerns about taxes and tax brackets, and I kind of give them a brief explanation of that. But yeah, it's progressive, and it moves in steps, stair steps. So again, we're going to get into a little bit more explanation about how you can control the position where you can be in what bracket, and how you can control, so to speak, what brackets you go into, by controlling how, or positioning how you receive and spend and gift income. All right, so let's look at some key points about our tax system in the United States and tax brackets. So initially, I stated that our tax system is progressive, okay, and our tax system is designed so that higher earning income taxpayers pay more, okay. Now that's the most simplistic way of looking at it, and the government in its in its desire to make that system understandable, that's how they set it up. You make more, you pay more on its face value. Okay, and that's how most people think, and that's how most taxpayers move forward, and that's why they're stuck in tax preparation and not tax planning. But the reality is that the what you pay is not only dependent on your tax bracket, but it has a lot to do with how you position yourself. But yeah, initially the tax system that we're in is trying to make it equitable by saying that those that make more have the ability to pay more, and so that's why it's progressive. But the reality of the situation really is there are different laws, many laws that are actually set in place for those people that are the higher earning income taxpayers to actually save on their taxes, and not pay more. And we all know that. We've all heard that. We all see that every day. And every time there's a new president and they want to look at the president's taxes, or even people that the president puts in the office, they look at their taxes and they go, I don't know how to understand how this person that makes all this money doesn't pay a lot of taxes. Well, again, on its face, it's progressive, and those that make more are supposed to pay more. But what they don't tell you is that there are laws that are written for those people that are supposed to pay more to incentivize them to get breaks, if you will. I don't like that term, but to allow them to pay less taxes so that they invest back into their businesses, into their real estate, into the economy, and thus keeping the economy moving and growing. But we'll get into that. Okay, so let's talk about marginal tax rates. Marginal tax rates are just the percentages that are used, the percentages that are always posted on websites and in the news. You know, again, the 10, the 12, the 22. Then those are marginal tax rates. They're letting you know at what margin you move from one bracket to the next bracket, and it's marginal. After $1 more in that bracket, you go to the next bracket. Okay. Now, there's such a thing as annual adjustments to the tax brackets, and the adjustments aren't necessarily the percentages. The percentages, or the rates, so to speak, are voted on by our elected officials. Okay, and that happens in periodically when there's a new administration, or when the government is maybe trying to stimulate the economy, or the government or the regulators are trying to make sure that the economy, our U.S. economy, maybe stays out of trouble, or brings down inflation, or boosts up maybe consumer spending, and they adjust the actual marginal tax rates, the percentages. But the annual adjustments are not in the percentages. The annual adjustments are made in the brackets themselves. So if you remember that first example, that 0 to 120, excuse me, 0 to 25,000, well, that was the bracket and the income that would be taxed in that bracket. So every year there is an annual adjustment, and maybe that 1 year is 0 to 25,000, and then maybe the next year might be 0 to 27,000. But annually, the IRS and the regulators look at the bracket and the income that is within the bracket, and they make the adjustments upward. And they make the adjustments because of things like inflation and the cost of living. Okay, so they don't change necessarily the rates or the percentages. That's done through um, our elected officials and different administrations that come in that want to stimulate the economy or affect the economy. But the actual brackets and the dollar amounts within the brackets are annually adjusted to adjust for the cost of living. And what they also try to prevent is this thing called bracket creep. And bracket creep, I know this is getting a little technical, but I'm probably even going to do a session on bracket creep. But bracket creep is what happens when inflation starts to adjust maybe higher than the dollars within that brackets annually. Okay, inflation basically meaning that the cost of goods and services are going up due to supply and demand, and the cost of those goods and services as they go up, if you don't adjust the monies within the brackets, then the cost of living adjustments upward start to creep in that bracket and make your dollar worth less, which means your buying power is lower, which means that you can start to actually creep up in a bracket, because what happens is when inflation goes up, a lot of time employers or even the government as an employer will give you a cost of living allowance, a COLA. I know you've heard that probably. COLAs happen every year within the federal government. Federal COLAs happen within Social Security, and so if you don't have that annual adjustment, then bracket creep will start to come into play. So understanding tax brackets is essential for effective tax planning. It allows you to anticipate your tax liability. It allows you to explore different tax strategies, which we talked about in previous session, and it allows you to manage your income in the different brackets. Okay, so I'm gonna give you a quick example. Let's say you're a taxpayer, again, $100,000 taxable income. Okay, and you fall within, let's say, the 12% bracket. Well, again, not all your income is going to be, that 100,000 is going to be taxed in that particular bracket. Okay, because you might have that lower bracket that's 0 to, like I said before, 25,000. So that first 25,000 is going to be hitting 10%, and then that 25 up to 75 is going to be hitting it at 12, and then after that it might be 22. So you can see how your brackets and your income are progressive in nature. Okay, let me give you 10 reasons why tax brackets are important to know. So knowing your tax bracket helps you to avoid overpayment. Okay, overpayment is, I'll give you an example. Overpayment is when you go to your tax preparer and you sit down and you reconcile your taxes, and your tax preparer says, hey, you've got a refund. And you go, great. Okay, in some cases, the term refund is just that. It's a refund. You're basically getting your own money back because you over withheld or overpaid your taxes based on what your reconciliation was at that point in time. So you, in essence, have given your money to the government for, let's say, a year, tax-free, and now you're getting your money back in the form of a refund. So if we just stop there for a moment, in my opinion, if you're in a certain situation, you have to decide what your preference is as far as refund. If you're getting your own money back, I need you to think about this. If you're getting your own money back after a year of not having it, that means you deprived yourself of your own money that you could add month to month to month to month, and had that in your income stream, and had that for disposable income to do whatever you wanted to do with it. But you had it withheld, you over withheld because you didn't plan, and now you feel good and happy when you get a refund of your own money. Okay, it took me some time to actually realize that. And as a person and personally, I don't really want to give the government my money, and not get interest back for it. But when we overpay, then that's basically what happened. And that refund, in that case, was money that was ours. We gave to the government. We overpaid because we did not plan, and then we're happy when we get it back. But we're only getting our money back in that particular case. In some cases, a refund is going to be part of money that the government gives to you as a taxpayer. But for the most part, most tax refunds in the United States are refunds, just that, not payments from the government, but refunds of your own money. Okay, so that's one reason why understanding tax brackets are important. I'm gonna go through this a little quickly now. Understanding tax brackets allow you to make smarter decisions about your salary, about your business, income, and investments. Think about knowing the marginal tax brackets, those percentages, helps you decide whether to take a bonus, or if you're an employer, give a bonus. It helps you to negotiate in business, or negotiate salaries. Okay, it helps you when you're thinking about giving a raise if you are an employer, or it helps you when you get a raise. Okay, knowing the rates and knowing at what point in time you're going to be moving that portion of the new income into the new tax bracket. But it just gives you options when you know about and understand tax brackets. It helps you to time your income and your deductions legally to lower your taxes. We've talked about that in the past. It helps you to determine how much of your retirement income is going to be taxable. If you know the tax brackets and you can strategically withdraw money from your retirement account when you're actually retired, then you know that you have the ability to avoid the next level in that tax bracket. Okay, you have the control based on the amount that you take, which will then either keep you in the annual bracket that we talked about from dollars, or when you go over that marginal tax rate, go to the next bracket. You have that control of that if you're retired. Understanding tax brackets help you understand how tax credits and deductions work. We've been over that in previous sessions. Okay. It affects your investment income and your taxation of your capital gains and dividends. And knowing the tax brackets can help you to optimize your capital gains. These are monies that you make from your investments and the dividends. But what it does, it guides you on when to sell or even buy investments, or withdraw income, or receive dividends from investments that you have invested in, and the companies have profits that they want um, to give to the shareholders such as yourself. Okay. Another reason why it's important to understand tax brackets, it gives you an indication of how much of your Social Security is going to be taxable. Okay. And what I found out over the years is that, and more of us are getting closer and closer to the tax, closer and closer to the age in which we receive Social Security. And what I found out is that most people have a misbelief about Social Security, believe that it's not taxable. And in some cases, it isn't taxable. And the biggest case is that that's the only income you get, so you don't necessarily reach the level of taxability in that Social Security. But a lot of people and a lot of taxpayers get Social Security and have other sources in addition to their Social Security. So the more sources of other income that you have, the more and more that Social Security may become taxable. And knowing the tax brackets, you can make adjustments to the other income that you're receiving to make sure that the tax complications or tax complications from your Social Security being taxed are lessened. Okay, so knowing the marginal rates give you an idea. Okay, if I take X amount of dollars for retirement in addition from my other plans, in addition to Social Security, now more and more of my Social Security is going to be taxable. Okay, so you have the ability to control that because you know rates and you know the marginal tax rates. Okay. Um, Finally, knowing tax brackets can help you with estate planning and with giving money and gifts to donate and to relatives. And when you're giving gifts and you know the tax brackets and how they work, you can determine when you want to give gifts, when it's best to give gifts in your favor for tax deductions, but also when it's beneficial to give gifts to the folks that you're going to give money to, those gifts to. Okay. In a lot of cases, when you're gifting maybe to family members, knowing the marginal tax rates, the tax brackets, how they work, you might time the gifts a little differently once you have a conversation with the folks that you want to give those gifts to, and knowing um, their income and the tax rates and the tax brackets will help you time when you give that and how much you give at what point in time. So you can see that knowing tax brackets, knowing how tax brackets work, really gives you a lot of control in how the end product, which means how much taxes you're going to pay, your tax liability, how much you have control in that. And so when you don't plan, you don't really have control, and that's when you get to the point where you sit down with the person doing your taxes and you go, man, there must be a better way. Well, guess what? There is a better way, and that's what we're talking about, the tax life. And again, I'm gonna keep harping on this, but tax planning versus tax preparation. Okay, every session I like to give a principle. Okay, an immutable law. Immutable meaning that it doesn't change. That law is cosmic law. It's just part of how the world that we live in works, and it's a principle, and principles don't change; they're immutable, and the principles can be used in all areas and aspects of life. So today I want to talk about the principle of positioning. Okay, and positioning works in all different avenues of life. We've all done positioning in some way, shape, form, or fashion. We have the definition is it's positioning. Law of positioning states that success is determined by strategically placing ourselves or oneself in or one's business or even an idea, positioning that idea in the most advantageous position in a competitive environment. Okay. Now, when I was putting this talk together, this session together, I said, what would be a really good example or story to tell to the viewers of this session and give them a real good picture of positioning? Because we've all done it. And I started with some sports analogies. I started with tennis. I said, if you've ever played tennis, um, the court is a certain size, and you hit certain shots from certain positions on the court. Okay, usually when you volley, that's the back and forth kind of thing, pop pop pop, pop back and forth. You usually on the back line of the tennis court. Okay, and volleys are the long shots, and then you go back and forth and back and forth. So you position yourself on the back line. Let's say when you're serving, you have to be at a certain part on the court, and then you position yourself so that when you hit the ball in a certain position, or if you don't, you'll get a fault. Okay, and then you start to do too many faults, and you give points to your opponent. Let's just say you want to hit a cross court shot. Okay, cross court shot usually is you're in one corner of the your side of the court, and you hit it across to the other corner. Okay, maybe to to hit it to a point where your opponent can't get to it from where they are, and you cross the court. Okay, again, you position yourself to hit that shot, and then lastly, let's just say your opponent hits a really high shot, and you want to position yourself to smash it. So typically, a high shot and a smash is carried out really close to the net, and it's coming down, and you're looking up, and here it comes down, and then you just bang and bang it down really hard to the point where it's coming down too fast, too furious for your opponent can't get it. Those are examples of positioning and putting yourself strategically to have a competitive advantage. And it happens the same way in taxes. In taxes, tax strategy is all about positioning. Okay, you're being intentional about what you're doing, and you're positioning yourself to strategically and to take advantage of your situation, and strategically position yourself to fall within certain tax brackets helps you determine what your tax bill is going to be at the end. Okay, so hopefully that was a good example of the position. Excuse me, the principal law of positioning. The wealthy do it all the time. If they're not in position, they put themselves in position, and they ask their advisor, okay, what do I need to do to position myself to take advantage of these tax laws that will help me to lower my tax burden? Okay, they don't leave it to chance. They structure their income strategically. All right. I want to give you some specific examples for two types of taxpayers. And these are taxpayers that are specifically, in my opinion, um, clients that benefit with the maximum amount of tax savings for when they do tax planning. And one of those specific taxpayers are business owners. Okay, we've talked about business owners, but this is an example of a strategy that a business owner, if you're a business owner, you could actually use, or you look at to position yourself to take advantage of tax brackets. So the first question when you want to position yourself in your business is, how is it structured? Okay, the most simplest form of business is cash and carry, what the government calls a sole proprietorship, right? It's one person, they go out there and they run their own business. They could be a carpenter, they could be a consultant, they could be a lawn care professional, and it's just them, and they do what they do, and the sole proprietor, and they go out and they earn their money, and they work and they earn. Now, that's the most simplest form, and that's probably what most people are used to when they're talking about business. And in example, since COVID, the sole proprietor and the individual business owner has exploded, and so a lot more businesses are one person businesses, side businesses, and they're making money as sole proprietor. But when a lot of people don't understand this, a lot of taxpayers don't know, a lot of business owners don't understand this. When you start to make a certain level of money and income, sometimes it may be beneficial from a tax standpoint or a positioning standpoint because of the brackets that you might fall into, that it's time to change your structure. And maybe you go from being a sole proprietor or a single member LLC, maybe to an S corporation. The amount of money that you're going to make in profit will determine that, and your particular situation will determine that, but you'll never know until you start um, strategically planning. So you may be able to save money, but if you don't know or position yourself, then you won't be able to leverage that. And just a simple change in structure from a single member LLC or a sole proprietor to an S corporation could save you thousands and thousands of dollars every year. So that's one example of a strategy that would take advantage of positioning yourself, but you have to know where you're going to fall within the tax brackets and the ranges of income within those brackets. Okay, it allow you to start to take deductions that would not necessarily be available to you as a sole proprietor, but you'll be able to take those deductions because now you change the structure of your organization or your business to an S corporation. That's just one example of a strategy. Um, for that particular um, uh, specific strategy for that particular business client, that will be beneficial because of positioning. Another example is for taxpayers that are high earners, meaning that they make W-2 income and they make a lot of it. Okay. Typically, there's not a whole lot of tax advantages to W-2 taxpayers. And the higher your income as a W-2, the less, or the less advantages you have. But there are some. But then it goes again to positioning. Okay, if you remember the definition of position, you want to strategically place yourself in a position to have a competitive advantage. So here's an example of a strategy for those of you who are high earners and make a lot of money on a W-2. You want to make sure that you are maximizing your retirement accounts. Okay, and you have multiple options for that. You have retirement accounts in most cases that are an option from your employer. So you find out what the max is that you can um, invest and set aside tax-free from your income. Obviously, what you can afford is going to be a part, going to play a part in that as well. But you find out from your employer what's the max you can put away. You hopefully have good investments in the 401ks or the 403bs or the 457 plans, but you use your employee sponsored plan. Then you go to position yourself outside of your employer's plan, and you can develop your own plan, a Roth IRA or a traditional IRA. Or let's take it another step further. Again, we're talking about positioning yourself. Maybe you're a W-2 employee and you position yourself as a business owner. And now, as a business owner, if you're making money, or even if you're not making money initially, you can start setting aside additional um, retirement income in a self IRA, self-employed IRA, or a SEP, or an individual 401k. There are retirement plans that are specific for gig workers and independent contractors and self-employed persons and persons that are set up as LLC, S corporation. But you maximize that as well, and now you start to affect your tax burden. Okay, but the other advantage to those kind of plans is that the income that goes in there, not only does it go in there tax free, but the interest that is accruing year after year after year accrues tax free as well. So that's another example of a strategy that if you're a high earning person, make a lot of money on a W-2, that you could use, and that's just one strategy. Okay. Um, the another strategy is charitable contributions. I just told a client today that they can actually affect their taxable income, which affects their tax liability, just by donating more. Okay, they could donate, and again, a lot of this is determined by your cash flow. I mean, we can go back to the fact that if you withhold the correct amount, you'll have more cash flow, which means you can take the cash flow that you would have been given to the government because you over withheld, and now you take that same cash flow, now you get a deduction for it, and then you now start to increase your charitable contributions. How many of you guys out there would love to give more to your church or to your mosque, but month to month, your income flow, your cash flow is kind of tight? If you properly planned and didn't withhold an over withhold and overpay, you didn't get a refund, because that money would then be available month to month to month, and then some of that money could be given to the charity of your choice, or just go to Salvation Army more, or Goodwill more, or whatever the choice that you have of charities, and donate physical goods. I don't know if anybody else out there has noticed, but self storages are blowing up. Okay, blowing up. They're everywhere, and they've been built everywhere, and it's not by default. What's happening is that we're accumulating more stuff. Okay, and I know that because I got a basement full of stuff that I've been accumulating for the last 17 years. Not all my stuff, got some family stuff in it, but the reality of it is that we're accumulating more things, and businesses like self storage are blowing up. Now, what would it look like if instead of keeping that stuff that you saving for someday or saving to give away to your kids, or you don't want to give that tricycle away that little Johnny rode upon when he was, 3 years old, how cute it was. But if you decided to go and donate that, and now instead of taking the standard deduction, which the government gives to you, you now control what you get because you put yourself in a position where you can itemize your deductions and get a higher itemized deduction, and now you affect your taxation just by that. Or how about the next step? You could position yourself and create your own nonprofit organization, donor advised fund. I mean, there are different things that you can do on a charitable level that can affect. And when I say affect, I mean that can make a difference in your tax situation, your tax life. Okay, but again, I'm gonna keep harping on this, but you got to go back to planning and forethought and being intentional. Okay, so those are just two examples for two types of taxpayers: business owners and high earning taxpayers. Some strategies that you can use, helpful hints. Okay. Um, Finally, let's talk about what this session is all about. What do we want to take away from this session? Well, we talked about what tax brackets are. We talked about what they aren't. We talked about what people think they are, and now you've gone through the session. You got a good you should have a good idea of what they are and how they really work. And like I said, I'll probably go ahead and put together a YouTube video on this particular topic. But your tax brackets are not set in stone. Okay, again we see they change annually, and then the percentages or the marginal tax rate change depending on the political climate. You have more control than you think. You have more control than you know. Tax preparation was fine. Tax preparation alone was fine in its time. Okay, in its time, and if that's all you know, then that's all you can do. But I'm here to tell you that there is more you can do, and I'm here um, to let you know that there is options that you have. Okay, let's see. Hey, Octavia, how you doing? All right, good to see you checking in on me. I appreciate the view. Um, but yeah, you got more control than you think, and I've heard some people that I follow. I like this quote: when you know better, you do better. Now, that's not always true. We all know that. Some of us know better and we don't do better. But I'm here to inspire you, and you guys inspire me. As I speak these things, it inspires me to do the same and to be better. And again, this is why I believe that this is my mission, my purpose, and moving forward. Okay. Um, let's see here. Kind of looking at some comments. I'm doing great. I'm doing great. Long day, and thank you for asking. I'm having a great day, and so I want to just say that I don't want you guys to look at tax brackets as a problem, but actually as I don't want to use the word solution, but a tool. Okay, and you have to be proactive and utilize the tool in your best advantage. Not everybody can maximize tax planning to a point where they're going to save thousands and thousands and thousands of dollars. But there is an element of tax planning that everybody can use. Okay, even if it's just adjusting your W-4 so that when you sit down and reconcile your taxes that you don't owe because you set aside a decent amount and you didn't go exempt and then forget to not go exempt. And now when you sit down in front of your tax preparer, or even if you do it yourself, and you go, I don't know what happened. Well, uh, you could have executed a small bit of tax planning just by saying, okay, I'm going to go to the IRS website. I'm going to look at the W-4 calculator, okay, and how to make the correct adjustments on your W-4. I'm going to do a session on that because it's not easy, and I will grant that. W-4s before 2018 weren't easy. Then after 2018 tax laws, they changed and made it even a little bit more complicated. Shoo, I see you. Let's see, it says here, I want to learn how to do better. Johnny on the spot, carpet cleaning. John, okay. All right, yeah, we got you. Um, just so I'm gonna make call to action at the end of this session, which is almost over. All right. So again, the problem isn't tax brackets. The problem is that we have to be proactive, and we need to know how to position ourselves properly. Without a tax strategy, I mean, um, yeah, you're just kind of at the mercy of the tax laws, and you're at the mercy of what you don't know. Um, there's a saying that basically says that without a vision, um, you will perish. Okay, and in this particular case, without a strategy, you will pay more taxes. It's just that simple for me. All right, so I want you to take some action this week, or take some action now, or take some action soon. Again, we're talking about the reason why we're talking about your tax life is we want to bring attention to it. Okay, then we want to take the information that we learn and be intentional. Okay, then we want to take that information that and execute it, and we know that there's going to be some disruption by the fact that we're executing something new. Is going to be uncomfortable at first. Your tax life is going to change. You've been kind of maybe thinking, okay, here comes January, got to get my taxes done. But your tax life, in my opinion, should be on your mind throughout the year, doing little bitty things periodically to put yourself in a position to save taxes. And then what you do with that money, that tool is totally up to you. But the idea is that you're being proactive. And then after you get done with that discomfort or disruption or change, then you become the thing you want to become, or you become a person that pays attention to their tax life and now is saving money. That pain of having to pay all those taxes is gone or minimized, and now you can take that money, that tool, and put it to use how you want effectively to affect your life. And again, could be affecting others that you want to donate to, charities, your church. You want to give more. If you have more, you can give more. And then finally, I want you to at pull out your taxes, or if you're doing your taxes anytime soon, talk to the person that's doing your taxes and say, can you tell me what bracket I fall into? Okay. And they may or may not know. And then there's some things that are even deeper than the face value or the posted tax brackets called your effective tax. Okay. And if you've got a tax preparer that doesn't know what that term means, then you need to think about the professionalism of that tax preparer, your effective tax rate. Okay. So I had a client in my office today. She said she's been viewing these live sessions. She said that she enjoys them, and she says that I should be more um, forthcoming about the services that our offices offer. And I told her I kind of hesitated because I want this information. This comes from my heart first and foremost. This comes from 30 plus years of preparation, and it comes from a little frustration because of this kind of situation. And so, but I also told her that, yeah, we're pivoting in our business, and we want to have more tax planning clients. Is that Colleen McCraney? Wow, okay. Elementary, junior high, high school, Colleen. How you doing? Good, good. Thank you for viewing. Wow. Went to elementary school, junior high, and high school. Good, good deal. Um, yeah. I'm here. Well, okay. Here is our call to action today. I got 5 slots. Now, granted, it's tax season. I'm up in here, and my tax preparation clients are on me like white on rice. But in order to pivot and really get into tax planning, which is a premium service, um, I have to start, and I got to let people understand and know. So again, you guys know I'm not the most well versed at Facebook, but we do have a button that was put on our Facebook page, on a business page for messaging. Okay. I'm going to open up uh, 5 opportunities for uh, a session that will actually strategy session that will give you an idea of what your tax situation look like. We're going to do an analysis, and usually when we do an analysis, we like to get your last 3 tax years of taxes, and then we ask you to fill out a questionnaire to tell us what you're looking to do in the future. What do you want your tax life to look like? And then once we get that, we do a proposal. We give you a proposal on where we think you should go in your tax life, and it might be initially just cleaning up some things and getting back on track. I understand that we do that quite a bit, but that's the offer. We got 5 strategies session spots available in the next couple of weeks for this month. And for those of you guys that are interested, go ahead and hit the message. Say, hey, I'm interested. Shoot me your email, your phone number, and myself or one of the staff will get back to you. We'll schedule a quick conversation, get some information out to you, and start you on the road to a healthy tax life, a more attentive tax life, a more intentional tax life. Okay. I do want to say I appreciate you guys. Miss Raylene, I see you there. How you doing? How's Brian? Appreciate you guys. Got some information for you, by the way. But yeah, send a message to us. We got 5 strategy sessions available going on the next couple of weeks. Right now, during tax season, it's primarily getting preparation done. But in all my conversations, in all my appointments, I'm employing my clients to look at tax planning as the future. I believe with the advent of AI, a holistic approach to your tax life is going to be paramount in the future. And so let's get started. So I thank you for listening to me. I got a lot of more information. I get excited about this stuff. Hey Brian, how you doing? Got some information for you. I'm living the tax life. It ain't always easy. But this is my season. This is when I get down. I don't play football anymore, but this is my season now, and so I will. I want to say thank you, and for those of you guys that want the sessions, message me. We'll get some put together, and I got 5 of those sessions available in the next couple of weeks. And as usual, I want to say thank you, and I will always leave you with this. And I want the question is, what's your dream? Okay, and I always say that because, I mean, I'm living my dream right now, and part of it is being able to take the knowledge and the special information that I have and pass it on to you. But everybody's got some kind of dream, and it may not be a dream, it may be a vision for your life, or what do you want to set aside in the future. But keep asking yourself that, and when you ask yourself that question, what's going to happen? Your mind is going to give you the answer, and you might not be thinking about it consciously, but your mind starts to unconsciously figure out how you get to your dream. And so I'm going to always ask you and say to you when I sign off, Don't forget to ask yourself, what's your dream? All right. Thank you so much. See you next session.